before we can perform closing entries and actually close the books of our company, we actually have to learn one quick difference, and that is the difference between permanent and temporary accounts. So on the left side I have this huge asterisk which states that it is very important for our final accounting cycle step, which is going to be closing entries in our next video, that we only close temporary account balances. And I really want you to focus on that word temporary, because we're only closing temporary accounts. And you might be thinking right now, aren't all of the accounts permanent? Why are some accounts getting removed? And I'm not saying that the accounts are getting removed, I'm just saying the account balances, just the balances of these temporary accounts are getting removed, not the actual accounts themselves. So let's see what I'm talking about. Let's bring up the two different columns, which are going to be permanent and temporary accounts. And sometimes permanent accounts are called real accounts, and sometimes temporary accounts are called nominal accounts. And let's start with temporary accounts, since they are kind of the focus of this tutorial. So to start off, temporary accounts are RED accounts, a really nifty acronym you can really easily remember, and it stands for revenue, expense, and dividend accounts. So those accounts are income statement accounts, except for dividends, of course, which dividends show up on the retained earnings statement. So just remember that acronym and you should be good for remembering temporary accounts. And I wanted to note that the balance of these temporary accounts, like I said earlier, is transferred out and reset to 0. So let's kind of see what I'm talking about by looking at a timeline. So when we actually let's close out one of these temporary accounts. Let's close out revenue. Let's say we're recording revenue at the beginning of the year, and we earn $3,000 of revenue. Well, at the end of the year, we're going to close this account and bring down the balance to 0. And the way we're going to do this is by transferring this balance to a permanent account, which is going to be retained earnings, because all of these temporary accounts are going to actually go to retained earnings, or they will eventually end up in retained earnings, I should say that, because they are actually indirectly closed to another account, which you'll see in the next tutorial. So remember that temporary accounts always at the end of the year are closed to 0, and then the next year we start re-recording the balances of revenue, expenses, and dividend accounts. And the reason we do this is because we want to know the revenue of each separate year. We don't want to know the revenue for year 1, year 2, year 3 combined. We want to know the revenue, expenses, and dividends of each separate year. So now that we kind of understand temporary accounts, let's talk about those permanent accounts. And permanent accounts are going to retain the balance at year end, and they carry over into the beginning of next year, unlike those temporary accounts. And what I mean by this is that, let's say in year or at the beginning of our timeline, we have an account like cash, and the balance is maybe $8,000 throughout year 1, and at the end of year 1, we're not going to bring this balance down to 0. We're actually going to carry it over, and then let's say throughout the next year that we increase our cash by $2,000. Well, our balance is going to be $10,000 at year end. So it keeps carrying over, and let's say our cash goes down by $5,000 in year 3, then our cash balance will be $5,000 because it was reduced. So as you can see, these account balances carry over. These are permanent balances that are just adjusted. And all of these, whoops, wrong layer. All of these permanent accounts are balance sheet accounts. So think of assets, think of liabilities, and think of equity accounts like common shares and retained earnings. So those are all permanent accounts, while the income statement accounts are the temporary accounts and dividends. So that's basically it, and we're going to see how to actually close these accounts and how we're going to actually account for it in the next video. So I'll see you guys in that one. I'm sure you guys have questions regarding accounting topics or our videos, so make sure to tweet us at #iNinjaNotes, like us on Facebook to receive updates or to share any quick anecdotes about how our videos might have helped, and like always, thanks for watching us on YouTube.